Women are one of the fastest growing investor segments. Investing is fueling a multi-trillion-dollar surge in female wealth. So how are these women investing, and what are they investing in? Welcome to I See Your Trade. I'm your host, Pamela Ambler. Soon we'll be joined by our special guest, New York Times bestselling author and female finance expert, Tori Dunlap. And then later, our resident expert, Oxford economics economist, Alex Holmes, will explain how the surge of female investors is changing the investment landscape. First, though, before the pandemic, just 44% of American women invested outside of their retirement account. Now, as many as 2/3 are investing. Women are growing their wealth like never before. What made women decide to take charge of their own financial future? I See Your Trade is brought to you by IC Markets, a leading high-performance trading provider. Trade up to IC Markets. Let's jump right in, and for anyone listening that can't see the charts, we will talk you through the data. Tori, your book, The Financial Feminist, is on the New York Times best-selling list. You also have created a podcast, which is the #1 podcast for business, both on Apple as well as Spotify, and you are a Forbes 30 Under 30 honoree. Let's start with millennials, because you've created a multi-million-dollar business from educating millennials, particularly women. How do female millennials compare to males in terms of financial literacy?
Yeah, I think when it comes to teaching men versus women about money, there is this sort of narrative that it is okay for men to talk about money in a way that it isn't for women. So men are having conversations about how much they make, their salaries, their bonuses, their investments, and their performance in a way that women are socially unacceptable to do.
And the stats show less than 20% of millennial women have high financial literacy. Why is that?
I think it's a lot of reasons. The biggest is systemic oppression. We're dealing with a lot of things that are outside of our control, and yet we've been told that if we don't have some sort of financial education, that we either are, born with the good with money gene or we're not. And yet there's so many other systemic factors that have everything to do with how we manage money, in addition to the things we can control. So the other thing is that when women have sought out financial education, they've largely been shamed or judged for their choices. Their spending is labeled as frivolous, the things like lattes, manicures, purses, in a way that NFL season tickets or golf clubs isn't. And so it just becomes this cycle. If a woman is interested in learning more about money, the people she turns to are the people who shame and judge her for her choices. And then, it becomes this cyclical thing.
That's certainly a bias that should not exist. Those things you mentioned are quite essential to me. Now, why is financial literacy so important for women in particular?
Yeah, money means choices, right? It means options. When you have money, you have the ability to leave toxic situations you don't want to be in anymore. You have the ability to donate to causes you believe in, or start businesses, or have children, or not have children, or buy a house, and all of those options open up to you. I know in my own life, her first 100K, this now global multi-million-dollar business, started as a side hustle for me. And if I didn't have an understanding of how to navigate money, I wouldn't have been able to be a business owner. I wouldn't have been able to travel internationally. I wouldn't have had these options for myself. And that's the feeling I want for every person, but specifically every woman, is the ability to use money as a tool to build the life that she wants, rather than the barrier to the life that she wants.
Right. And the other big problem is that research suggests that people don't really start paying attention to their finances until they're older. Why is that a problem?
I think for so many reasons. One, just the day-to-day. Again, if we want to live a certain life, we need the money to do so. And so I think that, if you're in your 20s and you want to travel, or you want to be able to, choose your career options, you need the financial standing to be able to do that. I think especially with retirement, right? It's this thing of like, oh, okay, that's 30, 40 years away. And I talk to so many people who identify as younger millennials or Gen Z who are like, I'm never going to retire because the world won't exist by the time I get there. So like, why should I care? And the biggest thing to think about is it's like, that is 65-year-old you.
If you look at your own journey, you saved 100K by 25. How did you do that?
It was many reasons. One was privilege. I had parents who educated me about money and who were also able to contribute to my college, and we collaboratively were able to pay for college together, and that's a privilege I like to acknowledge. If I had student debt, I wouldn't have hit that goal as quickly as I did. In terms of the logistics of, my own financial equation, I was saving automatically a portion of my 9-to-5 income every time I got paid. At the peak of that was 27% of my income was being saved automatically. I was also, maxing out my Roth IRA every year. I started investing when I was 22, and I was allowing those compound returns to work harder for me. Her first 100K was also a side hustle at the time. So any additional money I made through a business, through her first 100K, was money I got to pocket after taxes and expenses. And so that was huge, where I wasn't just making one source of income, I was making 2 or 3 or 4. And then I was also really strategic on value-based spending. I still traveled internationally. I still went out to eat. I live in Seattle, a pretty expensive city, and yet I was also saving my money and really strategic about what brings me the most joy, and therefore I want to spend my money on that.
And why do you think that there is this gap between financial literacy between men and women? Why does this exist?
I think that one of the things is again, that socialization. As men age, they're more likely to feel comfortable talking about money. Yet we know that we're in a society where statistically, we will have any other uncomfortable conversation before we'll talk about money. We will talk about death, politics, sex, religion. We'll talk about anything else before we'll talk about money. And I think in addition, there's so many systemic factors uniquely that women are facing, including but not limited to, the pay gap, the wage gap. We also are still expected for women in society to be caregiving, whether that's to children or to ailing family members, and that's having a huge impact on how we manage our money. So I think there's a lot of reasons that women are not being taught about money in the same way that men are.
What's also really interesting is that this gap we're talking about, it's pretty persistent across the board. It doesn't matter whether you live in a rich or a poor country. Why are women so far behind men on financial literacy pretty much across the world?
Yeah, I think, again, the socialization of how we talk about money or how the expectations are around talking about money. I think it's also, when you are a man earning more than a woman, everything about your financial picture is going to shift. You're going to have more options. You're going to have more promotional opportunities. You're also going to be able to invest more. You're dealing with not only graphs and charts that feel like you're trying to bet on a racehorse, but also, all of this jargon. What's asset allocation? What's shorting a stock? What is the diversification of your portfolio? So if you've even taken the step of getting started, which we're seeing countless women be too afraid to do, if we even get you over the hump of getting started, you quickly get into this analysis paralysis where you don't feel like you have enough information to navigate this correctly. There's so many touch points that we can have with anybody who, of any marginalized group, to be able to educate them and guide them about how to navigate personal finance that we're just not doing right now.
And there's certainly a lot to be hopeful about. The next chart here we have shows us that since the pandemic, women are actively investing like never before. Why was the pandemic a catalyst for female investing?
I think it was the wake-up call, unfortunately, a lot of us needed to realize that the inequality picture was just getting worse, worse and worse. And we know from the data that especially mothers and people, who the pandemic deeply affected on a financial level will be reeling from the effects of COVID-19 for years, if not decades. And so I think it was this moment where we realized, actually, we don't have to put up with poor treatment. We can leave, situations that are toxic, whether that's relationships or jobs. We can be business owners. We can use money as a tool. And that includes taking ownership and responsibility over the financial pieces of the puzzle you can control.
All right, well, before we dive deeper, let's turn to Alex Holmes from Oxford Economics. Alex, as we've just seen, there's been a rise in female investing, and there's also been a rise in trading apps. Is there a correlation here?
Yes, Pamela, I think it's a very significant trend, the rise of the female investor, and it's being driven by one particular segment, and that's young people. It also correlates very strongly with the rise of online trading platforms. Behind me, you have a chart with data from the CFA Institute showing the percent of US women who invest on online platforms. If you look at that 18 to 29 category, it's almost 100% of them. Now, this suggests that this might be an organic trend. It's people taking their own initiative to get into investing enabled by the greater accessibility of online platforms.
And Alex, this trend that we're seeing with women investing on their own, is this across all sociodemographic groups, or is it a particular income?
It's women of all incomes, but what's particularly interesting on the next chart is that it's the lowest income group that are actually the most active users of online platforms. This might be because they see it as an important second source of income, or they might lack the sort of more formal savings schemes, such as big company pensions, that the higher income groups have.
And what about geography? Are we seeing this as a global phenomenon?
Yes, this is another interesting trend, that it is a global phenomenon. So not only are online trading platforms the accessibility dividend of them bringing down barriers across income groups and age groups, but also across borders too.
Thank you so much, Alex. Now, Tori, back to you. As a so-called finfluencer or a finance influencer, you understand the importance of building a community. Why are online communities so important for helping to build female investor knowledge and confidence?
I would say communities are absolutely integral. We have seen so many folks who identify as financial feminists, who are a part of the Her First 100K community, who have unfortunately told us that this is the only place in their lives where they feel comfortable and safe talking about money. It's not with their friends, it's not with their family, it's not even sometimes with their partner.
And not surprisingly, younger women are interacting more online. Why aren't older women getting online too and learning about how to manage their finances?
Yeah, this might be a problem of, we talk about the financial literacy gap. There might be a technology literacy gap, right? I know that, my grandma and even my mom, are online, but they have a certain level of, or a lack of online knowledge as compared with, people under 40. I think there's such a distrust for, I think, older generations around information online or people who are talking about money online. Whereas, for me, talking largely to people in their 20s and 30s, that is the key source of information. That's where they're going first. And I think it's related to both a distrust potentially of the internet and also just a lack of understanding through no part of theirs.
Right. And we have a chart here that shows that women that don't invest, the percentage that plan to start joining online social communities by country is very low. How can we change this?
I think it's becoming more equipped to, again, not only educate women, but educate women in a space that feels exciting and optimistic and not so much based on numbers. I will explain compound interest to anybody all of the time. And that's a huge reason to invest, of course, as we talk about, the ability to double your money every 10 years and how, your interest earns interest earns interest. And that's great. And that appeals to a lot of people.
And finally, what would be your top 5 tips for women who want to get started with investing?
Yeah, I think the first thing is that truly the only bad mistake you can make when it comes to investing, or the worst mistake you can make when it comes to investing, is not investing at all. So I need you to just get started. Truly, the worst mistake you can make or the worst choice you can make is not making a choice at all. So that's number 1. Number 2, I can't tell you the amount of people who have told me that they believe that the 401k or the IRA or the, investing account itself is the investment. A lot of people put money into a Roth IRA and they think it's like a bank account and they're like, cool, I'm done. But they don't realize they actually have to go choose their investments. So it's a 2-step process. You put money into something like the Roth IRA and then you have to go choose your investments. I see women lose out on thousands, hundreds, if not millions of dollars because their money's sitting in financial purgatory. So do step 2. Number 3, I think, is thinking about retirement accounts as investing. The amount of people who come to me and they're like, I want to start investing. And I go, well, do you have a 401k? And they go, yeah, but that doesn't count. It 100% does. It's actually a really, really smart way to invest through your workplace or through any sort of retirement account because it's tax advantage, meaning that the government is incentivizing you to save for retirement by offering you tax breaks. Number 4, investing should not be sexy. Anytime you're seeing something flashy, something exciting, day trading, hot stocks, it's probably too good to be true. And I'm on TikTok. That's where the majority of our audience is. We have 2 million followers there. And I am constantly battling every day a bunch of other TikTok creators who want to talk about like the hot new investing thing. Investing is not done over days, weeks, months. It's done over years, if not decades, and should be consistent, stable, and over a long period of time. And finally, number 5, I was talking about before, I need you to just get started, truly. Investing's like a staircase. It's really easy to climb, except that first step is like 20 feet high. It's the best day to get started investing because you didn't wait to start tomorrow.
Thanks, Tori. It was great hearing your insights about the rise of female investing. A very big thank you to our special guest, Tori Dunlap, New York Times bestselling author and female finance expert, and our resident expert, Alex Holmes from Oxford Economics. Thank you both. Women are changing the investment landscape and with it, unlocking trillions of dollars of value. The ladies are changing the world of finance forever. Thank you for tuning in to episode 5 of I See Your Trade. I See Your Trade is brought to you by IC Markets, a leading high-performance trading provider. Trade up to IC Markets. Thanks for joining us today, and we look forward to seeing you next time.